Imagine standing in the middle of New York City, the heart of Wall Street. Giant skyscrapers tower above you, people rush in every direction, and billions of dollars are moving invisibly every single second. But behind all this chaos lies a system, a machine, called the US stock market, a machine that has the power to make ordinary people rich, to shake governments, and to decide the future of companies around the world. Today, we are going to uncover how the US stock market really works. Not just the headlines, not just the numbers, but the inner engine, the forces that make it run, the players who control it, and why it impacts every single American, whether they invest or not. What exactly is the stock market? The stock market is not a building. It is not just Wall Street. It is a marketplace. But instead of buying and selling goods like food or clothes, people buy and sell ownership in companies. Every publicly traded company in the US, from Apple to Coca-Cola, from Tesla to Walmart, issues shares. Each share represents a small slice of ownership. If you own one share of Apple, you technically own a very tiny fraction of Apple itself. Now imagine millions of people, funds, and institutions trading these shares every day. That buying and selling creates what we call the stock market. But here is the twist. It is not just about ownership. The stock market is about expectations, trust, and future potential. When you buy a stock, you are not buying what the company is worth today. You are buying what you believe it will be worth tomorrow. The two main exchanges in the US, there are two giants that dominate everything. One, the New York Stock Exchange NYSE, founded in 1792. It is the oldest and most prestigious. It is where legendary companies like Coca-Cola and Morgan are listed. 2. NASDAQ, created in 1971, this one became the home of technology giants. Apple, Amazon, Microsoft, Google, Tesla all live here. Together, these exchanges handle trillions of dollars. When people say Wall Street, they often mean these two places. Who are the players? The US stock market is like a theater. Different characters play different roles. Retail investors, ordinary people like you and me, investing through apps like Robinhood or Fidelity. Institutional investors, giant funds, hedge funds, pension funds that move billions with a single click. Market makers, the hidden middlemen who make sure there is always a buyer and always a seller. Without them, the market would freeze. Regulators, the SEC Securities and Exchange Commission acts as the referee, making sure the game is fair, at least in theory. And of course, the companies themselves, they issue stock because they need money to grow. Instead of taking loans, they sell ownership to the public. That is why the stock market exists in the first place. Let us talk about the magic question. How a stock price is decided. It is not random. It is not controlled by one person. It is a constant tug-of-war between supply and demand. If more people want to buy Apple shares than sell them, the price goes up. If more want to sell than buy, the price drops. Simple in theory, but incredibly complex in reality. Because behind every trade are emotions, the market is a mirror of human psychology. Every headline, every rumor, every speech from the Federal Reserve, all of it moves the market because it changes how people feel about the future. Why does the stock market matter? You might be thinking, if I do not own any stocks, why should I care? Here is the truth. The stock market impacts every American. If the stock market crashes, companies lay off workers. Retirement funds like 401ks are directly tied to the stock market. The history of booms and busts, the US stock market has had legendary highs and devastating crashes. 1929, the Great Depression began with a stock market crash that wiped out fortunes overnight. 1987, Black Monday, when markets fell more than 20% in a single day. 2000, the dot-com bubble exploded and trillions vanished. 2008, the housing crash, triggering the Great Recession. 2020, the pandemic crash, followed by one of the fastest recoveries in history. Each crash taught lessons, each boom created wealth. But together, they show one truth. The market always moves in cycles. Banks, loans, mortgages, all influenced by market stability. Even US politics is shaped by stock market performance. It is not just a casino for the rich. It is the financial backbone of America. The role of technology today. The US stock market is no longer men in suits shouting on the floor. It is algorithms and machines. Over 70% of trades are executed by high-frequency trading systems. Computers making millions of decisions per second. For ordinary investors, this means prices move faster than human reaction. But technology also opened doors. Apps like Robinhood made investing possible for anyone with just $10. Suddenly, Wall Street was in everyone's pocket. Myths versus reality. Many believe the stock market is pure gambling. That is not true. Yes, short-term trading is risky, and yes, people lose money chasing alt stocks. But in the long term, the US stock market has created more wealth than almost anything else in history. The reality is simple. Patience and discipline turn the market into a wealth-building machine. The future of the US stock market, where is it going? Technology will continue to dominate. AI and automation will shape trading. Crypto and digital assets may merge with traditional exchanges. Global investors will increasingly treat the US market as the safest place for wealth. But the core will never change. It is about people, trust, and the belief in the future of companies. So next time you hear the words Wall Street, do not just think of suits, skyscrapers, and billion-dollar deals. Think of it as a living, breathing system that connects every worker, every retiree, every entrepreneur in America. Because the stock market is not just about money, it is about belief. Belief that tomorrow can be bigger than today. And that belief is what keeps the entire engine of the US economy alive.